Good evening and warm welcome to all the participants. We are very happy to welcome Ms. Shalini Warrier. This is the session number 222, and we are going to be speaking about fintechs and banks, the collaboration or competition, and this will be led by Ms. Shalini Warrier. And I will do a brief introduction of ma'am. So these are WiseViews leadership conversations, which we hold every Friday, and this is session number 222. Thank you so much, ma'am, for joining. We are talking about fintechs, competitors or collaborators for banks. And this whole session will run for about 1 hour, out of which first 20 minutes will be opening remarks by ma'am. And after that, we'll have 40 minutes of Q&A. Let me take this opportunity to introduce ma'am. She's the co-founder and CEO at Gosree Finance Limited. She is an independent director at Tamara Leisure Experiences, and she is former executive director at the Federal Bank. Ms. Shalini Warrier is a seasoned financial services leader whose career spans nearly 3 decades of shaping institutions, nurturing talent, and driving transformation across India and global markets. Widely regarded as one of the few women from Kerala to rise to the highest leadership levels in Indian financial services, Ms. Shalini Warrior is admired for her integrity, strategic foresight, and belief in building institutions that combine financial strength with social responsibility. As a CEO and promoter of Gosree Finance Limited, she brings a strong sense of purpose, governance excellence, and long-term vision to building a resilient and inclusive financial institution. Her leadership journey includes a distinguished tenure as executive director at Federal Bank, where she was a key force behind strategic renewal, digital innovation, and cultural transformation. Known for her ability to navigate change with clarity and conviction, she played a vital role in aligning technology, people, and strategy to future ready the organization. Fantastic, ma'am. She spent a significant part of her career with Stanchart Bank, one of the world's leading multinational banks. There, she handled complex leadership responsibilities across multiple disciplines and geographies, including India, Brunei, Indonesia, Singapore, and the UAE. This global exposure shaped her perspective on risk, growth governance, and customer centric banking. She's a chartered accountant and certified associate of the Indian Institute of Bankers. She stood All India first in the ICAI exams in 1989, reflecting her strong academic foundation and lifelong commitment to excellence. She is an active contributor to industry dialogue through forums such as CII and the Indian Women Network, IWN of CII. And it is a CII who have recommended her name. So we want to thank CII as well. So thank you very much, ma'am. Thanks for joining. I will also take one moment to introduce my esteemed colleague, Dr. Prasad. He is the Senior Director at Academic Wing in ICFAI Group. He brings 3 decades of rich experience to the table. And he started off his career as an entrepreneur, later as a corporate professional, and now as an academic. He holds BTech in Electronics and Communication from IIT Bombay and PGDM from IIM Kolkata. Thank you, Dr. Prasad. Thank you so much, both of you, for joining. I'll stop sharing my screen here. Ma'am, over to you. Kindly present the opening remarks, which is for 20 minutes. And after that, we'll have 2 clusters of Q&A. First cluster will be taken up by Dr. Prasad. I'll come back to the second one. Over to you, ma'am. Thank you.
Thank you. Thank you very much, Sudhakar. And it's a wonderful and a pleasure to be here this evening. First of all, very impressed with what you all are doing every Friday. Having a session of this nature calls for a lot of discipline, resilience, commitment to the whole concept of leadership. My pleasure to be here this evening, and happy to see that we have a fairly large number of participants for a Friday evening. So thank you. So what I thought I'll do for the next 20 minutes or so is run through a presentation on this whole topic of fintechs. Are they competitors or collaborators for banks? In the course of doing that, I will draw upon my own experience as a co-promoter and a CEO of Gosree, which has been relatively more recent, but we've done some work with certain fintechs even in this role, as well as draw upon what I've done with Federal Bank and some of the global practices that are out there. So that's the intent of it. I think it's useful to sometimes just go back a little bit and see where this whole evolution of fintech started from. While globally it has come in during the recession of 2008, it was actually triggered by the fact that many customers were finding it very difficult to work with banks. What Fintechs really brought to the table, therefore, was a better customer experience using the latest technology, using data more effectively, delivering products that was more suited to the customer needs. So that was one end of the spectrum, which was where the fintechs were coming from. Obviously, this would not have been possible if it was not for certain enablers that were there. And if you look at the enablers that were there, and if you talk about just India, the fact that there was a huge smartphone penetration, the digital public infrastructure that the government put in, the whole concept of APIs and what needs to be done, and the proactive regulations. And I'll just refer to two items in this context. First, I'll talk about proactive regulators in India. Very clearly, in my experience, and having worked with Reserve Bank of India for a very long time through my tenure in Federal Bank and thereafter, I am not aware of any central bank which has a couple of things like a department that is devoted to fintechs, headed at a fairly senior level, which is the fintech department. The department is known to be proactive in understanding what needs to be done from a regulatory perspective to enable the growth of fintechs. They're known to run hackathons every year in various subjects on where fintechs are allowed to participate and come up with ideas. So that's one angle to it. The other is, again, Central Bank of India of Reserve Bank of India has actually created an RBI Innovation Hub, as most of you know. The RBI Innovation Hub is again a very innovative organization that is devoted to seeing how banks and fintechs can work very closely with each other. So between the digital public infrastructure that was there, which is denoted by the JAM Trinity, Jandan, Aadhaar, Mobile, the smartphone penetration, the availability of 4G and 5G, the API ecosystem that entities like TCS and others have put in place, and the regulatory framework that was there, clearly India has seen a much larger spectrum of fintechs out here. So the question then comes as to should this be competition versus collaboration? And I'll just go back to my experience with Federal Bank. I'll rewind to the fact that it was probably the year 2017 or 2018, 2017, when we sat in a boardroom with the board of directors. We had founder of Aadhaar to come and present to us, Pramod Verma. He came and he gave us a fairly decent and a very detailed presentation on the whole evolving landscape of the digital public infrastructure in India and the role that fintechs were playing. A lot of discussions ensued at the board, and there were many views. Should we, what should we do? We know that fintechs are becoming an integral part of the ecosystem. What should we do? Should we compete with them? Should we collaborate with them? The response that we came up with in Federal Bank, and that has been the cornerstone of the strategy for the last few years for the bank, has been it is a fact in life that fintechs are going to be here. You cannot prevent the fact that customers are looking for certain areas of convenience. Customers are looking for enhanced distribution. Customers are looking for a very different user experience. Customers are expecting banks to be like the Amazons and the Ubers of the world on your fingertips. That is an expectation from customers. Therefore, it makes no sense to say that we would not collaborate, but we would compete. That didn't make sense at all. And that's when the bank took a point at a very critical decision to say we should collaborate with fintechs rather than compete with them. Now, it's good to say that statement and say we will collaborate with them, but what does that really translate into became the big subject for discussion at the Federal Bank board. And what we first did as a bank was we said, fair enough, we are committed to collaborating with them, but we cannot just go out there and make a statement saying we're going to collaborate with you, fintechs. We put down first what was the infrastructure that we needed. And the first thing I recollect we did was we actually implemented something called the API gateway. And we went ahead and built APIs. We built about 60, 70 APIs with absolutely no idea who would use those APIs in the future. But we were proud enough to say, here is our API infrastructure. We have a sandbox, we have a user acceptance environment, UAT environment, and then we have a production environment. We have these APIs. You fintechs out there, you can come and experiment with us. You can try these APIs out through the sandbox, and we can then build use cases together. That was the whole concept where we said, let's collaborate with fintechs rather than compete with them. And for Federal Bank, that made eminent sense for several reasons. One, yes, a federal bank was growing, becoming a national player, was expanding beyond the state of Kerala and was building branches. But at the end of the day, India is such a big country, we're never going to be able to reach everybody. So from a distribution standpoint, the collaboration with Fintechs was helping. So that was point number one. The second point was the brand Federal was very well known in Kerala and even outside Kerala, but was associated with a certain customer profile, the small and medium enterprises, the doorstep banking varieties, the people in the catchment area, the millennials, etc., were not completely able to relate to Federal Bank. Through collaboration with Fintechs, we've identified a good route to be able to reach those customers, which was the second point that we had. The third point we had was that there are certain product categories where Federal Bank did not have a significant presence in. And if we wanted to scale up, collaboration would be the best way to do it. And that is where, our collaboration with certain entities for personal loans, credit cards, etc., came about. So for Federal Bank, from a strategy perspective, it made eminent sense to go down this route of collaboration. It wasn't a decision that was taken kind of on the fly. It was thought through, and it was built with an infrastructure that enabled us to go down that path of collaboration. So technically, banks do face constraints. Whether you like it or not, there are legacy IT systems. And I think a very good example of how banks have overcome some of that through collaboration is State Bank of India. State Bank of India has literally spun off its YONO product. As you know, you only need one product, which is the entire mobile banking infra that SBI has put in, has literally spun it off to some extent as a literal, while it may not be structurally a different company, the mindset SBI has created, the infra SBI has put in, is that YONO is treated separate, is really separate. Because the fact remains that legacy IT systems and slower innovation cycles impact banks like State Bank of India, impact banks like us. And therefore, these constraints are overcome through this collaboration with Fintechs. Because one thing we have to appreciate, Fintechs come with much more agile technology. They come with, inbuilt mindset of how do we do sprints faster? How do we do development faster? How do we understand customer research and make the changes faster? With the best of intentions, banks face constraints. And therefore, this collaboration that happens, which brings in the best of what banks can offer with the best of what fintechs can offer, is why banks prefer collaboration. There are many forms at which banks and fintechs collaborations happen. One is at the very strategic levels, you have a partnership. And that's an example. I mean, it says German banks, etc., use it, but I can give you again a federal example. The arrangements we have with that Federal Bank has with Scapia, for example, for issuance of credit cards, or with Paisa Bazaar for sourcing personal loans, or with Jupiter and Epify for savings accounts. These are arrangements which use fintech solutions, which provide the best of the solutions to the customers, and therefore becomes a strategic long-term partnership. There are many examples of product-based collaborations. If you look at Federal Bank's example with Paisa Bazaar for personal loans, or with Bajaj for personal loans, these are very product-based collaborations, where for a specific product, you go to a fintech and work with them. The last is equity investments, M&A, and there are again many examples in the Indian banking environment, whether you look at Flipkart or you look at the investment in PhonePe, etc. Many banks have gone ahead and put stakes or acquisitions that will internalize innovation. So there are many forms in which bank-fintech collaboration happens. The most dominant one for India has been strategic partnerships and product-based collaborations. There have been some examples of equity investments, mergers, acquisitions, etc., but largely they are between strategic partnerships and product-based collaborations. So I think this is self-explanatory. Payments, lending, insurance, wealth, neobanking, financial inclusion are various areas where fintechs can collaborate, and you have many examples of this. Neobanking, I think, is a very good place where the example of Federal Bank's partnership with Jupiter and Epify comes in. In the case of wealth, entities like Grow, Zerodha, etc., have many banking relationships that enable them to bring the best of the products to the customers. But I'll talk about financial inclusion, and I'll give the team that is listening to me two examples of financial inclusion. One, a more recent example, and one slightly older. The one example that I will take from the federal bank, which gives us an example of how collaboration happens in financial inclusion, is the arrangement federal bank has with an entity called DGV, Digivriddhi. This was an entity that was created for financial inclusion for dairy farmers of Gujarat. All of us are aware of the fact that in Gujarat, you have the Gujarat Milk Marketing Corporation Federation, which is Amul. And Amul has a very large presence in the state of Gujarat, which has dairy farmers across the whole of Gujarat. What we did in Federal Bank was working closely with DGV. We went down to the level of these dairy farmers and enabled them to get a savings account, enable them to get a debit card, enable them to do mobile payments, AEPS, Aadhaar enabled payment solutions, etc., through the Digivriddhi app and through the Digivriddhi business correspondent arrangement. So the bank was providing the infrastructure in the form of APIs, the deposits were with the bank, etc. That was what one part of it. But that was not all. We took it to the next stage to say, based on the documents and the data that we have available, how can we enable more lending to the dairy farmers? So the data being available was what Amul was supplying, because Amul had absolutely good information about the milk pouring history of each of the farmers. How much of milk is produced, how much of it is rejected, how much of it is accepted, what is the weekly turnover, what is the fortnightly turnover. Using that data, we were able to come up with a very good concept of what we call cattle loans. So the farmers were given loans to be able to, kind of get to the next stage. If they had 2 cows, they could get loans to make it 4 cows, and from 4 cows to 6 cows, and so on. The security for us was not in the form of any physical security, but the assurance that we knew what the history of the farmer was. We knew what the payments were coming in from Amul, and those payments would come into the banking system, into their bank account, and therefore would be able to repay the loans. A very good example of how a bank and a fintech came together to elevate the lives of dairy farmers of Gujarat. A more recent example, which we've worked on here in Gosree, where we've done more recently, we've partnered with a business correspondent to give micro unsecured loans to give unsecured loans to micro small enterprises in certain tier 2 and tier 3 places of Tamil Nadu. These are typically small entities, very, very small entities. They could be a small tailoring shop. They could be a small grocery shop. They could be a small, small hardwares, that you see in tier 2, tier 3 cities. When they needed loans earlier, microfinance, they could probably get access to microfinance. But a lot of them are now elevating themselves from joint lending to individual lending. Using the history of what happened with the microfinance partnership, with that data in hand, with this CIBIL records in hand, with the innate knowledge of how they work in the community, with the personal discussions we do with them, we're able to give them loans which elevate them from microfinance into single self-financing. We've started this across some of the remote places of Tamil Nadu, and we are working very closely with a fintech in this area. It's entirely done through an assisted model at the field. These are not customers who can do self-service. You can't expect them to just log on to an app and do what they do. They need assistance. And therefore, we have field officers, a very good collaboration of human and digital, and we give them loans. And these loans are entirely processed without any paper through a digital spine, through a digital backend, because you can authenticate their Aadhaar through UIDAI APIs. You can get their CIBIL scores you can get their credit scores through the CIBIL APIs. The entire process is digitized completely. We've started that since October, and happy to note that the NBFC that I am a co-promoter of and the fintech have been working together to scale it. We are offering it across 4 tier 2 cities in Tamil Nadu, and will be gearing that up. So these are some of the areas where fintech collaboration comes in, where the best of what banks can offer and the best of what fintechs can offer can come together. So I think I've referred to some of these earlier, but I think it's worth talking about. On the bank side, there are clearly, or on the NBFC side, there is innovation, time to market, etc., becomes much faster. And we also, through collaboration, ensure that we don't become competitors in the future. On the fintech side, it's extremely important because fintechs do need banks, because the trust comes from a bank. The credibility comes from a bank. Nobody would probably know the company I'm dealing with, like Fintechs, but they would get to recognize Gosree non-banking finance company. Similarly, when we went to Gujarat with DGV, they may not know DGV, but Federal Bank brings a stamp of trust, a stamp of credibility, a regulatory oversight over the whole process. So I think there's great motivations in both sides to come together to get the best of it from a customer standpoint. There has been another concept that has come out, which is how do you kind of bring it together and cooperate as well as compete in some instance. But I think this is more relevant for some of the big techs like Amazon's, Google's, and Apple's. And they really pose probably a more serious threat because of the kind of ownership they have on the data, the dominance they have. And these we are seeing more in overseas countries. We are not seeing too much out in India. But I think over the next few years, we'll have to watch out as to how these people shape up. If you look at WhatsApp, which came in with WhatsApp Pay, but wasn't able to make much inroads into the country because Google and PhonePe had done a lot. Having said that, between Google, PhonePe, and Paytm, 90% of the UPI payments are governed by them. So there is that element over there which we need to be conscious of, which we need to be cognizant of, which we need to keep our eyes and ears open on. I think some of the stuff that I spoke about earlier, there could be specifically to banks. Some of the characteristics are when we were working with Federal Bank and, working at the fintech strategy, we found that, the board was quite open to this idea because there was a lot of diversity in our board. There was a lot of, there were lots of discussions, no doubt. There was a lot of debates, no doubt. But I think the gender and the cultural diversity helped to improve it. Obviously, well-capitalized, profitable banks make a living. And I think one of the big points that needs to be done is internally, you've got to have a very high level of maturity. You've got to be able to understand what is it that you need to do. And therefore, the role of people like the chief digital officers and the API strategies that I alluded to form a very important part from an alliance standpoint. So these were some of the bank-specific drivers that influenced this choice of strategy. Pure competition, if we get into pure competition, I think it's going to increase the risk and threaten financial stability, but cooperation leads to better customer experience. And I give you a very good example of that. Again, what we noticed when Federal Bank launched credit cards on their own versus launching credit cards along with a partner. We do have a credit card, Federal Bank has a credit card of her own, but also has a partnership. There was definitely the organic credit card, the own credit card was learning a lot from the fintech, learning a lot from how they were doing customer experience. And that brought the best of that into our own experience. So this cooperation with fintechs leads to an overall better customer experience and definitely increases the innovation capacity of the organization. I think this is a thing. There are more than 20 fintech unicorns in India of various kinds, and we're now seeing fintechs getting into the into the IPO and getting listed, as you would have seen recently in the case of entities like Grow, etc. And the adoption is quite high, and they account for 70% of the digital payments. In the case of wealth management, a very large chunk of why retail broking has become so popular in India is because of the likes of Zerodha and Grow, and they are really the ones who've opened up this whole thing. So I think India is definitely, very germane to the whole fintech story. And I think both fintechs and banks have gained through that. Again, some more opportunities coming up. I think UPI everybody knows about, but when you look at things like OCEN, for example, Open Credit Enabled Network, still extremely nascent, still got a long way to go, but I think it's got huge prospects ahead of it. If you've looked at what the central bank has done with digital currency, with the e-rupee, you can clearly see which way the winds are blowing from a regulatory standpoint. ONDC, a lot of work happens on ONDC. Even personal loans are now sold on the ONDC platform. So India has ripe opportunities and is going through a huge amount of disruption. It's gone through this in the last few years. The next few years promise to be even more exciting for the fintech and the bank, when they come together. I think this is very self-explanatory. Indians are truly unique. Our ticket sizes tend to be very, very small, where our volumes are very high. If you look at UPI month on month, there are billions of payments going through it. We tend to use most of a digital and a physical, like I mentioned in our own business that I see when I lend to micro and small enterprises. While the spine or the back end is digital, the front end is physical. The front end is truly requires human assistance. One of the key things that India has a difference on is this whole digital public infrastructure has actually been provided by the government. Our entire stuff is based on UADAI, etc. And compliance is obviously extremely thing. And I think, in my view, RBI has come a long way in this through the digital lending guidelines that were issued a couple of years back and were refreshed in May of 2025, through the co-branding credit card guidelines, through what can be done and not done, what can be done through things like default loss guarantees, etc. RBI has come a long way in recognizing the role of fintechs. So I think in conclusion, what I would like to say, and then open it up obviously for questions, is I think this illusion that fintechs may replace banks, at least in the Indian context, is, I think, still an illusion. One of the biggest things for a bank is obviously the trust and credibility that banks bring to the table. They trust, customers trust us, customers look at us for long-term stability, and they have decades of credibility. But at the same time, fintechs are building trust. They're coming into the thing, and therefore this collaboration between the two goes a long way in bringing the best of both worlds to the customer. So that's what I'd like to say in conclusion, and I'm happy to take any questions as we go along. Thank you.
Thank you, ma'am. Thank you very much. That's a fantastic overview of the entire landscape. You have, for our benefit, have drawn the Venn diagram between banks and the fintech and the common area and the complementary roles that they currently play. And the business case for collaboration and cooperation is the second one. And the third and most important point is the global perspective of the initiatives that have been led by other countries, of course, driven by need. But where do they stand? And vis-a-vis those global initiatives, where does India stand and what kind of volumes that we occupy? That's fantastic. And most importantly, the digital plus physical front end, which makes the whole financial services opportunity an inclusive one. I think that's a very interesting area to talk more about. These are the four important bullet points that I have captured from the initial presentation, ma'am. We look forward to having a detailed conversation now. As I mentioned, we have two clusters of Q&A. The first one will be taken up by Dr. Prasad. I'll come back to the second one. And during my Q&A, I'll request the audience to raise their hands in case they have any new questions to ask you. They can talk to you directly as well. So, Dr. Prasad, I request you to start the cluster one. Thank you.
Thank you, Professor Rao. Thank you, ma'am, for a wonderful introduction and positioning various aspects of fintechs and banks and their strengths for what people can leverage into the future. I'll start with a slightly adjacent question. You have come a long way from where you started your career, and both in terms of employment opportunity, women working in employment as well as women taking up senior positions. There have not been too many examples. I mean, there's a lot more which can be done and what more can happen in the future. So if you look back at your journey, what are those aspects which you'd like to communicate to the audience? And, you've also taken care of the family, you've been in senior positions. So in this world of banking and now fintech, how did you traverse this journey? And what are the lessons for the next generation, Gen Z and Gen Alpha, as they face different challenges?
Thanks for that question. I think, yes, through my journey, I've had the opportunity to work in different countries, different businesses, different roles, etc. And I think I would take back, in my view, three main things. The first is, this whole innate ability to put up my hand for opportunities, not wait for somebody to ask me as to whether I would like to do a particular role or not do a particular role, but make it kind of, put up my hand and say, I'm willing to try it. Why don't you help me get that and move ahead? I'll do it my best. I'll give it my best. A lot of people, and women in particular, don't put up their hands for opportunities. And I think that comes from an innate sense of, maybe I'm not ready enough, maybe I'm not confident enough, etc., etc. There could be other constraints. I don't deny that, but I think ultimately it's the mindset. And it's that mindset that I think I encourage a lot of people to look at and say, put up your hands. You may get the role, you may not get the role, you may find you'll have to wait for another 2 years, but it's okay. Put up your hands and ask for it. That's the first thing. The second thing is, I think it's extremely important to have a support system around you. And that is something I think I encourage a lot of people who are young people who I mentor. And I don't mean necessarily just the support system from from a home standpoint, but also some friends and other people who you can step in and help you, because they're the ones who will help you in your journey. And I've been fortunate enough to have that. The third thing I pay a lot of attention to and a lot of importance on is the role of mentoring. I'm a big believer in the fact that I gained from a lot of mentoring that I got in the early stages of my career, both formal mentoring and informal mentoring. And for me, that became a good sounding board to go out and sound people on what needs to be done. As part, I mean, in continuation of that, as part of my introduction, Sudhakar mentioned I do some work with the Indian Women Network of CII. And one of the big things we've been doing in the southern region in Indian Women Network is every year for the last 5 years, we've been doing a formal mentoring program for our women members. That mentoring program is cross industry, is cross state. So I, for example, have every year been mentoring a couple of young professionals who are from a very different industry, technology, food processing, etc. We do that very formally because we do believe that the opportunities for mentoring that some of our women professionals get are not as good as we would like them to be, and therefore we step into that. So I think between putting up your hand for opportunity by making sure you have a support system that you create, which is a give and take support system, there will be opportunities where you have to help them and they will help you back. And getting into a mentoring program, either within the corporate that you are a part of, or even organizations like Indian Women Network, or even informally seeking out a mentor, makes a big difference. And that has really helped shape my career in the last few years.
Excellent, ma'am. The first one is individual, the rest is about building an ecosystem to help others get there. The next one is, related directly to our topic. Now, RBI is proactive. It is doing a number of things. So what is the RBI's vision on where India would be? It's a specific space. It need not be comparable to what others are doing. But what is RBI's vision on where this will be as it goes along?
The question is on fintechs in particular.
Fintechs and banks combined, because
okay. I think, having been fortunate enough to have worked with RBI, especially during my federal bank stint, and even now when I have my conversations with them, as I said in my presentation, it's very clear from what the governor has been saying, what the deputy governors have been saying, that they're very, very appreciative of the role of fintechs in the Indian ecosystem, in the financial ecosystem. They're quite very appreciative. No other regulator has actually created a fintech department or created an RBI innovation hub or runs hackathons or has policy sessions open for fintechs. So clearly very, very cognizant of the fact that fintechs have an important role to play. Very open to suggestions, very open to feedback. So even when guidelines are issued out, like the digital lending guidelines or the co-brand circular, there's a lot of deliberation that happens and a lot of public opinion that has been taken. Where very clearly RBI has been, making sure everybody understands the boundaries is the regulated entity is the bank. There is no running away from that fact. So the fintech is not the regulated entity. So they're happy for fintechs to collaborate with banks. They're happy for banks to have strategic partnerships, but banks recognize the role that they play as custodians of wealth, custodians of deposits, and therefore the regulated entity is the bank, and therefore the compliance responsibilities are fully and squarely upon the bank. And that is a recognition of the fact that it's the bank that builds the trust with the customer, the bank that holds the deposits, the bank that lends the money, and therefore the trust has to be on the bank as an entity. So to cut a long story short, RBI is very open to fintechs, is open to collaboration with fintechs, has laid down guidelines as to how it has to be done, has opened up opportunities for who can give, for example, default loss guarantees. All of that is pretty clear. It's pretty prescriptive. As long as you adhere to it, as long as you follow those rules, very, very open to this idea. And the fintech department does a wonderful amount of work on this. They themselves are pioneers, like, for example, in the central bank digital currency, the e-rupee, etc. So my view is this space is pretty well understood by the regulator and is something they're very keen to develop. This is also supplemented with some governmental support. So if you look at entities like Niti Aayog, for example, 3-4 years back, Niti Aayog had done a white paper out on the subject of digital banking and what its role in the Indian ecosystem is, and how we can increase access to financial inclusion, particularly to small and medium enterprises, through this collaboration between fintechs and banks. So I think very, very open field out there, Mr. Prasad.
Excellent, ma'am. Now, that brings me to the next question. When you do this sort of a collaboration, banks, yes, the risk levels are already well defined. But if you look at it overall, apart from that the bank takes the responsibility for regulation as well as compliance, are there any other measures for risk control which in this particular ecosystem?
Yes, many, many measures are there. What we did in federal, and in fact, what I do in Gosree also when I'm working with fintechs is, first, there's a lot of rigor and discipline on the onboarding side of things, Prasad. So we work with the fintech to understand who are the fintechs, what do they bring to the table, what is their background, the founders, how invested are they, what do they understand about the business, do they come with a compliance mindset, or do they come with a kind of a recklessness in their mindset. A lot of time is spent pre-onboarding the fintech. Once we understand that mindset and there is a symmetry of mindset and there is an understanding between the two entities, then the next stage happens where we do a complete due diligence on the fintech. We go through their systems, we go through their processes, we audit them, we understand them through a third-party entity, things like data privacy, security, access controls, all of them are looked at. That's the second level. The third level is where contractually we agree on what the roles and responsibilities are. What is it that the fintech is responsible for? What is it that the bank is responsible for, or the NBFC is responsible for? And document and understand it very clearly. So it's only after that that the onboarding process gets complete, actually, after all this is done. Post that, very rigorous review. So, for example, a monthly review process to make sure that we're on track, that what the fintech is doing and what the bank is doing or the NBFC is doing is completely on track. The second is literally every quarter, potentially a audit of their thing, depending on the size of the entity, the extent of the collaboration, the kind of products that are being sold, etc. A quarterly audit or an annual audit. So it's a very well thought through and structured process, which whether it was federal bank or whether it's Gosree and it's working with fintechs has been doing and will continue to do. And all banks follow a broadly the same framework, which is be sure who you're onboarding. Once you're onboarded, make sure contractual responsibilities are clear. Make sure you do audits pre and post. Make sure you review the working of it, because you can't just do a partnership and leave it out there. You have to review how it's working literally on a month-to-month basis.
Fantastic, ma'am. So a lot of process-related
Yes.
engagements which take place.
Absolutely. Yeah.
Okay, ma'am. Now I come to the last question in this cluster. Now you did mention about the markets, the diversity of the markets, and the aim of such a collaboration to penetrate different needs, different partners. So in that context, if you need to give some highlights of Gen Z and Gen Alpha, Gen Z may be right away, but Gen Alpha sometime. So what are those highlights which are of course, convenience everybody wants, but what are those other highlights which are specific to this target population, which will help banks and fintechs to get more access to them?
So I think the way I describe it and I alluded to it is, the Gen Z, Gen Alpha, whichever, wants the security and trust of a bank with the ease and convenience of an Amazon app. That's how I look at it, So it's like you want the ease and convenience. You want it to be non-intrusive, but at the same time, you want it to be able to suggest things that you should be doing, and with whether it's goal-based savings, etc. So I think it's a very unique position, right? Banks have to provide security, have to provide trust, have to provide ongoing monitoring, etc. But you have to also provide convenience, ease, flexibility, intrusive when required, non-intrusive when not required. So I think that combination is what Gen Z looks for. Nobody wants, particularly in banking, I don't think anybody wakes up wakes up any morning and says, "Oh, today I have to do a banking transaction." No, it's in the flow. It's something that you want to do on the flow. And therefore, this collaboration between banks and fintechs should enable that, should be using, for example, artificial intelligence a lot more smartly to intrude where required, but come out where not required. That's really where the world is going to be. It should be so, what do I call it, seamless for the customer. It should be so much in their way of life. It's like they shouldn't have to think about it. And that's where we're evolving to, actually. It'll take a little more time, But I think that's where we're evolving to.
Just a supplementary to that, ma'am. Are you to access these customers, their behavior to get to that customer and make him a customer? Their behavior is different from those of the others. So, what is your take on the current go-to-market access, which perhaps fintechs are providing, or bank is also involved? What is your view on that aspect?
I think the traditional modes of access to the customer, traditionally, what was the access to the customer was, largely feet on street, going and reaching out to the customer and trying to cover the geographies, whether it's with the bank-owned staff or the DSAs or anything. Those days are coming down for some of the more salaried segment kind of customers. That's more digital marketing. While you're doing a transaction on a Swiggy, do you apply for a credit card? While you're doing something on Uber, do you do a personal loan, etc.? That's what's happening with salaried. But I have a very different view on the micro and small enterprises. Prasad, there, in my view, the country still has a very, very strong preponderance of and need for what I call actual feet on street, because that's the only way you can reach the customer. They are not the ones who are going to go online and find the products. You need people on there because it's a very physical relationship. So there's no one size fits all approach for a country like India. The salaried kind of customers don't want feet on street, don't want physical assistance. They're happy to do it on the go. The micro and small enterprises need physical assistance. That's how I see it.
Great, ma'am. I think thank you for the excellent response to all the queries raised. I hand it back to Professor Rao.
Thank you, ma'am. It's a great conversation that's underway. I have a few questions, and I once again invite all the members around the screen to get ready with their questions also, just in case they would like to ask, they can raise their hand. I'll go ahead with my first question, ma'am. It is regarding what you have briefly mentioned in your presentation as well. How do you see the role of fintechs and banks evolving, especially when the CBDCs are scaling up? What might be the impact on trust and issues like adoption of customers? How do you see that panning out?
Honestly, I think the jury is still out on that. It's going to take a little while to think. But I see the fact that, something like CBDC is definitely going to become center play in the next few years. It's going to take a little while because I think India jumped a few generations through UPI. And I think the demonetization was a huge trigger to get the adoption of UPI. Today, I don't think any of us can visualize a life without UPI, right? All of us around this table and beyond are, Google paying things. It's become literally a verb. You Google pay something, you don't realize there's a UPI infrastructure behind it and all that stuff. That's where we've come to, and we've come to that through demonetization, etc. The next big push is going to be, in my view, something like CBDC. Which is why the RBI is very, very keen to get that embedded into the solution. And why that becomes important is the point that I mentioned in my presentation, which is to say that banks bring trust, banks bring credibility, banks bring assurance, banks bring the fact that, somebody knows my money is safe and secure. When that gets combined with something like central banks endorsed digital currency, that's truly going to make things different, because your money is safe. At the same time, you've got the convenience of payment. So the way I see it is things like CBDC, or even for that matter on the lending side, account aggregator, open credit enablement network, ONDC, are all going to become very much like the UPI of our lives. It's going to take a couple of years. It's going to take 2-3 years. It's going to take adoption there. UPI got benefited by the demonetization trigger. There may not be that similar trigger, but that's the way world is going into, or at least India is going into. And I do want to mention two things. I didn't say too much about it. I think the role of account aggregator is definitely going to be extremely important. If you see, all of us now use account aggregator quite extensively in our lending decisions. The second is something that RBI Innovation Hub is doing, which is called Unified Lending Interface, which is an infrastructure by which, like the UPI for payments, how do you make ULI for lending? How do you make it so much easier for people to lend to customers and have the safety and security of getting APIs that are safe and robust? So a lot of interesting stuff happening ahead. Just have to keep ahead of it and keep cognizant of it.
Thank you, ma'am. Again, there are two important points that I want to recall, partly from your discussion. The digital payments market, the seamless transactions or transfers that are happening, everyone they have a liking for it, right? It is projected to grow very, very big by the next, say, 10 years or by 2034, the projected number is $700 billion market for the digital payments. That is one. The other thing is these fintechs are becoming really, really profitable. And that is based on these 2 points, what kind of lessons both fintechs as well as banks can learn from? For example, the unit economics or the portfolio that they bring as far as fintechs are concerned, the acquisition of customers and the value that they give, that is on one hand. On the other hand, for banks, how can banks remain really relevant when these transactions are happening outside the traditional channels? So I see roles for these two. Well, what is your perspective and advice how it is going to actually evolve?
So I think this is, this is at the core of this whole collaboration aspect of it. I think, how do you collaborate, therefore, to bring the best to the customer? So my sense on this is, first of all, I think, the underlying fact remains, and I'll talk about India in particular. It's unlikely India is going to see something like a new bank or a Monzo, which is a completely digital bank, or a new bank, which is a completely digital bank. I think regulations in India are meant to protect the common depositor, meant to protect the layman, meant to protect the financially, not the completely financial literate, just coming into the financial inclusion. So banks will have a big role to play in ensuring trust and credibility of that whole ecosystem, and they will therefore be the stamp of trust and credibility. Having said that, at the same time, as you said, things which banks don't need to necessarily do. So, for example, payments have got disintermediated completely. Google Pay does the payments, Phone Pay does the payments. The banks still provide the switching mechanism. Banks are there at the background. Banks, without the banks, they cannot do it. And banks provide the infrastructure for it. Banks provide the technology for it. Banks provide the stamp of, making sure payments are actually moving through the system. But the outside layer can be definitely done by a third party. Who is best provider? What a Google Pay does, a bank cannot do because they invest in that kind of technology. So the point I'm making is that the role of banks and the role of fintechs is going to be very different to each other. What fintechs will do is not what banks will do, and what banks will do is not what fintechs will do. And therefore, it makes sense for us to come together and collaborate in the future. And, banks will have to continue investing in infrastructure because providing reliability, safety, etc. is the bank's responsibility. Banks will have to continue to provide balance sheet support in the form of lending because fintechs will not be able to do it. Banks will have to continue to provide the deposits and the assurance of the deposits that are there. Those, I think, are game states for a place like India. But at the same time, fintechs will come in to enhance the distribution, to enhance reach to the last mile, to provide greater convenience to customers, etc. So I feel it as complementary to each other and not, think.
Yeah. Thank you, ma'am. Thank you very much. Before I take up a question, there is one question already appearing in the box, but before I read that, there is a strong push for integrating AI into the financial services, not just in India, but also abroad, globally. What is your commentary on how do banks manage this competitiveness and risk while playing their traditional roles, while safeguarding the primary role that they have been assigned to or expected to play? How do they measure up or catch up with this AI adoption?
So I think in my view, AI is definitely something that is a strong enabler from a bank perspective, and there will be areas where banks will gain from AI from a productivity standpoint, from an efficiency standpoint. Having said that, I think giving up everything to artificial intelligence is not something that the banks can do. There will have to be a very high element of what I call natural intervention in it or human intervention in it. Couple of areas where I think artificial intelligence clearly can play a very good role. We've seen that already. Customer service, for example. We know for a fact that it's much easier to get customer service done through, chatbots and those kind of things. So at least 80-90% of the queries get taken away. But there are another 8-10% of the queries or 10-15% of the queries where you do need human beings to be able to think because there are complex things. There are much more So if you can take away 80-90%, then the service you render for the balance 10% can be elevated to become much more sophisticated, much more deeper, and a greater engagement with customers. Similarly, if you look at lending decisions, a very large part of the lending decisions for salaried employees can be taken through artificial intelligence. But I can tell you, in my experience, the NBFC that I am in, if you leave artificial intelligence to start taking decisions for micro and small enterprises, you will miss the real intent of the business and that. So I think it's a combination, no one size fits all approach. Artificial intelligence in customer service, artificial intelligence in underwriting, artificial intelligence in things like, financial risk management, AML alerts, money laundering alerts can play a good role. But without that overlay of, what we bring to the table, which is the empathy element, the relationship element, we cannot be successful.
Fantastic, ma'am. That's a beautiful answer, actually. That still retains the role that one can play with respect to the relation metrics, the empathy that you talked about. Amazing. While still working on competitiveness and efficiency part of what AI can drive. Thank you so much, ma'am. I'll request Srinidhi TPV to ask question, but before that, one hypothetical question, ma'am. Let me say this and then make room for others to ask questions. The hypothetical question is, in the next, say, 10 years from now or so, do you see these fintechs and banks merging into a new kind of financial institutions, or these distinct roles will persist? That's the hypothetical question.
A little bit crystal gazing into the future, but I see both serving very different needs, and so I see them coexisting in the financial ecosystem of India. That's my view, at least. Yeah.
Great, ma'am. Thank you. Over to you, Srinidhi, for your question.
Thank you so much, ma'am. Actually, I'm a PhD scholar doing PhD on fintech adoption by MSME. So my question is like, what do you think about fintech adoption by MSMEs in India in terms of borrowing, financial management, and other things other than payments, which is in very high now adoption? So what do you think about it? And if you would like to give some advice to me on which will be better to me to do research on, specifically in fintech adoption. So yeah, that's my question. Thank you, ma'am.
Thanks, Srinidhi. So I think, I'll start with the second part of it, which is where do I think, research can play a role on. I do believe the role of fintechs in micro and small enterprises. I wouldn't even go to the extent of saying MSME, etc. It's really in the micro and small. What is it that fintechs and things like artificial intelligence can do in that area is a very good topic for research in the Indian ecosystem. But the Indian ecosystem is so much MSME oriented, or micro and small enterprises oriented, that anything we can do to make their access to financial management, access to funds, access to ease of doing business, access to even things like GST returns filing, etc., will make a big difference to increasing their productivity. So I think that's a good area for you to do some research on. In fact, recently, maybe a little bit of a digression, but I know there was a paper being done by, I think it was SP Jain College of thing, which was on whole account aggregator, and how do you get account aggregator to become truly a tool for financial inclusion and lending decisions. So there was a research being done on that. So I think that whole area lends itself to being, researchable, if I can call it that word. On the first question, where do I think? I think the journey is still a long way forward for us, Srinidhi, when it comes to micro and small. And this come to light a lot more in the last 6-8 months when I've been doing some work in this area. If I look at the micro and small enterprises, you're right. Payments, I think, is very easy. I think they've moved, to using Google Pays and, phone pays and sound boxes and all that. But if you step back and look at it, access to finance for them is still a very much a challenge, and it's very much dependent on a very human interface process. If you look at how they manage, how they can get more ease of business and therefore focus on the core business, there's still a lot of work to be done. And I think that will come through tools like this, which I mentioned, which is how do you get account aggregator to be truly something that they can work on, something that we as lenders can use and they as borrowers can use. How do we get open credit enable network, upgraded so that they can get easy access to funds and, are able to build a credit history which is credible enough to get funds. So I think that work is still a long way off, Srinidhi. I think we've solved very large extent the problem of all these for salaried individuals, as I call it, but the self-employed ones, the micro and small, still a long way to go. And that's where entities like, what I'm trying to do with Gosree, what some of the other entities are doing is in that space, focused on making this the mission, trying to solve for salaried, etc. So I'm right now devoted to making sure how do I make access to financial funds relatively simple for micro and small enterprises? How do I therefore work with them to elevate their style of business, elevate their entire perspective? So it's still a long journey, Srinidhi, in my view. And your research in something like that would definitely help us.
Thank you so much, ma'am. Thank you so much.
Thank you. Ma'am, there's one more question. Looks like agenda-led question, but I'll ask that question. How can L&D value add, L&D, learning and development value add to fintechs as well as banks, especially in the age of competition and hectic work life or hectic scheduling? So what is the role for L&Ds and how they can benefit?
So L&Ds as in learning and development?
Yeah, learning and development. Yeah.
Okay. I think that's, whether you're fintech or no fintech, I think learning and development plays a very important role in, energizing people, in empowering people, in getting them up things. So learning and development plays a very important role. But I think the point is two things. The curriculum or what we teach has to adapt itself to the future, has to change to the future. That's one part. And the way we render it also has to change, because today's generation doesn't have the patience to go through things. In fact, I'm quite impressed that we have a webinar also at this time, but I'm saying the modus operandi, it's like short bit-sized pieces, attention spans are lower. So my view is learning and development has to evolve both in terms of curriculum to make it more relevant for the audience and in terms of the modus operandi of rendering it. Both of these will have to keep up with the times,
Fantastic. Thank you, ma'am. On data privacy, personalization related question, I think Subbalakshmi would like to ask you. Over to you, please.
Good evening, ma'am. This is Subhalakshmi here. It was really informative listening to you. So my question is the privacy versus personalization. I think this is a very hot topic now. So I would like to ask whether this fintech companies using the customer data, whether it will be a threat to customers. Can you please share your viewpoints on this?
Thanks. That's as you said, a very topical question and a very relevant question as we are working through the Data Protection Act, the PDP, the Personal Data Protection Act that has come into being, and how we work through it. It's really a very relevant topic. So I think this is always a balance, right? Anything we do, there is a balance between risk and reward. Anything we do as a bank or as an individual, there is a balance. My view is, and this is kind of personal, is there has to be a very high level of transparency and openness to the customer about the data, and therefore making sure the customer understands what data he or she is sharing and what it's going to be used for is absolutely imperative. I'll give you an example of that. So in some of our lending decisions, we do need to use sometimes data, which is, what is the customer's kind of otherwise behavior on his mobile phone? What are the kind of activities he's doing on his mobile phone? But I can't just take the data and run with it. So we make it very clear to the customer in a language and a form that the customer understands. He's educated about the fact that this is the data, this is the purpose for which it is being used. This is why we believe using that data is important to get a better decision. And then if consent is given, then we use the data. So informed consent forms the bedrock. But it's not, sometimes what we run the risk of is informed consent can become a tick box exercise. How do you move beyond the tick box? How do you do the true spirit of informed consent by using language that the customer understands, by not tucking it away in some other corner, by making it open and evident to the customer in a language that he understands? The vernacular becomes very important, for example, in doing that. So I think it's really that, because otherwise, personalization is extremely important. I, for example, like the fact that somebody is recommending, when I go into Amazon, it's recommending what the next book for me should be, etc. I like those recommendations, but I've provided my consent to say they can use my data for that purpose. So it's a balance I have done in my mind. How do I get the customer to do that balance is important, and that's where informed consent plays a very important role, Subhalakshmi.
Thank you so much, ma'am, for answering my question, and I want to thank the forum for this such wonderful webinar.
Thank you. Thank you very much.
Great, ma'am. Thank you so much for so patiently responding to all the queries. It's a great learning experience as we have imagined, especially a session with you. We have a lot of expectations given your profile and background, and it has exactly turned out to be what we thought it's in store for us. Thank you so much, ma'am, for this 1 hour of your well-structured presentation and also the responses to so many queries that we have. Professor Prasad, you have any last question before we wind up?
I think, this is a area which India needs, and the briefing that we have got, the inputs that we have got, it opens up a lot of opportunity for people to think in terms of careers, enterprises,
Yes.
opportunities, etc. So to that extent, it was excellent, ma'am.
Excellent. Excellent. Thank you very much, ma'am. I was trying to summarize very briefly that fintechs bring in technology, they handle data probably a little better, and also the delivery part of it. Whereas on the bank side, trust as a major factor plays in their favor. And of course, together, we'll have to work on plugging in empathy and making ourselves very inclusive in our services. I think this is a very big takeaway for the collaborative role that fintechs and bank can play. Of course, the regulatory role that is being played by the government of India and the allied bodies in regulators' domain is very, very noticeable, very laudable as well. I think it is putting our country ahead of similar such ventures outside compared to various other countries as well. The revolution and the consumer experience of using the digital transactions, to say at least one, is near saturation, in the sense that I don't know the statistics exactly out of the population that we have, how many people or what percentage of entire people use the digital transactions. But large number of them seem to be using, and all of them have an amazing experience of these digital transactions. And there's a very high note of satisfaction while using this. So thank you so much for your presence and your expertise and your advice on this topic, ma'am. I will use this PPT. We will prepare a sort of a summary of the session and we'll share with you. Once you approve, we'll actually upload it on our website so that those people who have missed it today,
Sure.
They can go back and learn. Apart from the video, they also have a text summary so that it is there for them to go back and keep learning from those summaries. I want to thank your team, ma'am, for coordinating with us so patiently. I think the culture in your organization is amazing. I mean, when you talk to one or two people, you get to know what kind of culture it is. When you're actually not marked in the mails and when they interact with us, it gives us a hint of what kind of culture that they are templated into. I'm very, very happy, ma'am. Under your leadership, they're going to grow and they're going to do extremely well. I thank Adra for sharing the presentation and all your colleagues also, all the best. If time permits, I'll come and meet you.
Please do, please do.
I'll come and meet you around 21st of Jan if you are at town in Kochi.
That should be,
I'll again reach out to you.
Please
and
reach out, WhatsApp, email, any of those modes,
Thank you, ma'am. And one word of thanks to all the participants today. On a Friday evening, large number of people have joined on Zoom as well as on Facebook Live. Their questions have been very, very interesting. We have shrunken it to suit the requirements of, say, 30 minutes or 35 minutes of Q&A. But otherwise, all the questions are very, very good. Sure. But much before that, they did not imagine that your presentation is so self-explanatory. So some of the questions had to be knocked down. But otherwise, it's quite participative. They were all glued to the screen throughout. I want to thank all of them for this wonderful presence and interaction that they've had. Thank you so much, ma'am.
Thank you very much for this opportunity and all the best to everybody. Thank you.
So, ladies and gentlemen, we'll see you next week on Friday on 16th of January with another leader at 6:30. Till then, keep reading about Gosree and also about what's happening in this country. Follow some videos and talks that ma'am has given in the past. Everyone is a treasure of knowledge for us to learn from. And if we can catch up with some of those concepts and some trends, that's the best way to go to her videos and see that. So once again, thank you very much. Have a great weekend.
Have a great evening
and a good night.